Greetings, members, one and all of the Salivation Nation. Are we being lied to about silver supply and demand? Let's explore. Yes, this is an article that questions some of the supply and demand data from the Silver Institute by Jan Nieuwenhuis. I've actually covered some of his stuff before. Never quite got how to pronounce his name, but this is coming to us from voyamagold.com, and it was shared with me by Chuck and Plata. And this talks about the Silver Institute and some interesting information here. It says that every year the Silver Institute publishes silver supply and demand numbers that suggest the market is in a deficit or surplus, although there is no correlation between their market balance and the price of silver. Investment decisions based on the Silver Institute supply and demand data can turn out badly. Interesting. In a previous article, there was discussion about gold trades more like a currency than a commodity. An approach of a gold market balance which produces a surplus or deficit is therefore not appropriate nor indicative of price direction. Because silver is both a monetary metal and an industrial commodity, its supply and demand dynamic requires special attention. The conclusion of Jan is that silver, just like gold, trades more like a currency than a commodity. Let's take a look at where he's going with this. In ancient Sumer, roughly 5,000 years ago, silver was a unit of account, a medium of exchange for large purchases, and a store of value. Silver has been used as money in countless civilizations ever since. Because silver is durable and valuable, very little gets lost. More than 90% of all silver ever mined is still above ground. That's extremely important for people to understand, especially those people that believe that silver and gold will one day be at 1-to-1. Not going to happen for that very reason. Since the 19th century, silver is also being used for industrial applications. Currently, CPM Group estimates that half of all above ground silver is in industrial products, and the other half is in coins, jewelry, silverware, and investment bars. The total above ground amount of silver is about 1.6 million metric tons. It's a lot of silver out there. And here we can see the total above ground silver over time versus its annualized world silver mine production over time. And we can see how much increase silver has been over the course of time, especially really since about 1948. It really started to pick up and has been picking up really ever since. For perishable commodities, a market balance calculated by subtracting demand from supply is indicative of price direction. This is because annual production is far larger than above ground stocks. When wheat demand rises, wheat supply can't be quickly expanded, as there are no vast stocks that can enter the market, and the price has to go up. The wheat market balance tells us that there is a surplus or deficit in the market that will either decrease or increase the price of wheat. Below is a chart that shows the wheat market's net balance, which is supply minus demand. The y-axis is inverted for more clarity. Whenever a surplus deficit matches price direction, the chart bar is color green. If it doesn't match, the chart bar is red. You can see that most chart bars are green, and nearly all red bars signal at a price turning point. So there we go. That's a great way to explain it. We can see there. So the wheat price is reflective of those movements there. For monetary metals, however, this approach is not suitable. The reason is the stock-to-flow ratio, which is calculated by dividing above-ground stocks by annual production. Silver's stock-to-flow ratio is approximately 30. Annual silver mine production is 26,000 tons, and 800,000 tons of silver is in jewelry, coins, and bars, which comprises the stock. At the right price, this can enter the market as supply. For the sake of simplicity, Jan chooses not to count above ground silver that is an industrial product as stock. Below is a chart that shows the silver's market net balance as disclosed by the Silver Institute's most recent World Silver Surveys. You can see that for the past 16 years, the market was permanently in deficit, while the price went violently up and down. This reveals that the net balance disclosed is misleading. Interesting. Net balance there. Global silver market minus supply. So it looks like it's going down. And we see the price there. Yet, in the Silver Institute's World Silver Survey 2018, it reads, in the silver market, as for any commodity, physical imbalances both explain and influence price action. In my view, for monetary metals, there can't be physical imbalances because at the right price, there is always enough metal. That's right. For perishable commodities, the forces of supply and demand put a strain on available stocks, which moves the price. But when stocks greatly exceed annual production, in the case of silver, it is mainly trade-in stocks that set the price. Silver trade is not limited to what the Silver Institute measures as supply. That's important. And which is mainly mine output, and demand, which is mainly newly fabricated products. Worth mentioning is that the Silver Institute doesn't disclose the actual amount of above-ground silver, which is 1.6 million metric tons according to both the United States Geological Survey and CPM Group. Instead, the Institute publishes identifiable bullion inventories that account for roughly 60,000 tons. No wonder why people are confused about silver's STF, which again is the silver stock to flow ratio. So there we see it, and here we see the net balance, negative 80.1. And then you get into massaging the numbers. And you've heard me warn whenever I post statistics and talk about statistics, how they can be massaged and be, especially when we're talking about things like this that are relatively complex. You can make them, you can massage them around to make them say what you want. The Silver Institute has repeatedly changed their methodology in the past decades. Before 2013, there wasn't a net balance disclosed in the World Silver Surveys. In those years, the difference between supply and demand was referred to as an implied net investment or implied net disinvestment. There we go. Yeah, there it is. A market surplus was referred to as an implied net investment and vice versa. To me, this is odd because when supply exceeded demand, the residual surplus, implied net investment, was supposedly a reason for the price to rise. Wow. In 2007, the Institute wrote, the higher trading range, price went up, has to a large extent been supported by continued investors' interest in the metal, as our relatively modest net implied investment number for 2006 indicates, sentiment has tended to remain overwhelmingly positive. This methodology was not accurate, as evidenced by the fact that from 1985 through 2012 implied net disinvestment was positively correlated to the direction of the silver's price only 54% of the time. In 2013, the Silver Institute changed its methodology again. Not only was the net balance approach adopted, which is Exhibit 4, the numbers were also changed. Previous years of implied net investment surplus were flipped into negative net balance years, a deficit. This can be seen by comparing the data from 2009, 10, 11, and 12 in Exhibit 4 and 5. And for people like me, when you look at these exhibits and you read through all of this stuff, here's Exhibit 4, and you try to make reason of these numbers and compare them to previous years, you kind of get into a fog when you see these numbers, and knowing kind of really kind of what to trust. I mean, numbers they do speak, and they're probably true, but the way they kind of can massage and to make them say things, it does bring a bit of confusion, and you don't know what to believe because they can be misinterpreted or interpreted a different way. But I tend to agree with Jan on this. And for some reason, some things that he's not even talking about here that I knew from before and have mentioned in prior videos about the silver supply. There was a video I did a while ago called The Big Lie About Silver Supply. And it roughly talks about some of this stuff, but not in quite as much detail. The above, in the conclusion, the above shows a difficulty for consultancy firms of presenting a market balance for what is chiefly a currency, monetary metal. And that's where I a little bit of disagree with him, looking at it from that standpoint, because yes, you do have some of that effect, but I think really what he means to say is a recyclable hard asset. In other words, because silver is being utilized in technology and in industry and healthcare, it can be and will be and is being recycled. It is consumed, but that consumption does not mean that it disappears. Silver is being recycled, and as the price goes up, that will provide more incentive, and as technology improves, they will find more ways to efficiently recycle silver in a cost-effective way. The author's message is not that Silver Institute's reports are useless. They contain all sorts of valuable data, and I agree. He's just skeptical of any conclusion derived from a silver market balance, surplus, or deficit. To Jan, it makes more sense to focus on variables that also drive the price of gold, such as inflation, risk, and interest rates, to get a feel for silver sentiment. You have the World Gold Council and you have the Silver Institute, and they're not on the same page. He says in this chart below to note the correlation between gold and silver here below, silver price and gold price. And you can see how they have widened here. This essentially shows the silver to gold ratio. And back in 1979 through 1980, especially at a point, they were kind of more closely together through the mid-80s, and then started to separate a bit from 1985 onward. But we've seen a big separation between the metals between 2012 and 13, especially through 2019, 2020. And even now, as the prices have spiked up for both, they really have not narrowed that gap there for sure. So very interesting indeed. Some good research, I think, by Jan Hugis, however this name is pronounced. Very interesting indeed. And I will just say this, that, with one thing is for sure and abundant from this article that is a good takeaway, is that when you look at the numbers from the most unbiased sources you can find out there, there is a lot of silver out there when compared to gold. Silver is a precious metal. Silver is rare compared to base metals, but nonetheless, it is a very abundant. There's no shortage. We can get silver. The problem is the supply chain issues and manufacturing bottlenecks. Other than that, really, the metal is in abundance and will never be as rare as gold, ever, in no way, shape, or form, no matter what happens. Gold is treasured, and it's treasured for a reason, because it's rare. No, there's not as much gold that is utilized in industry and technology, and I think in part and parcel because it's treasured. But if you take all the gold out of all the Federal Reserve Bank, or out of all the reserve banks around the world, it's still, make no mistake, it's still much less available than silver. But nonetheless, I believe in silver, but I do question and wonder myself about if they're telling us the full truth about supply and demand for silver. Very interesting take. Thanks again to Chuck and Plata for sending this along to me. Post your thoughts below. Would like to extend a multitude of gratitude to you all for taking the time to watch this video, and encourage you to please rate, share, comment, and subscribe.